Good morning.
Yeah, okay, great. Hi, everyone. I just realized, we're at a green conference and we're all holding our papers, but rest assured, we are all very, very green conscious. Let's just get straight into it, shall we? When it comes to climate change and ethical investing, investors and policymakers are taking notice. So much so that global green and sustainable borrowings this year are near the $300 billion mark and have already surpassed 2018's record, according to Bloomberg data, of course. So for all of you, my first question is, give us a broad overview on your thoughts on why this is happening now.
So it's rude of me to go ahead, but I will as the only man. I think it's very appropriate for an ESG panel to be the only man on the panel. So look, Divya, I would say that why this is becoming more important. I mean, if any of you saw the article, again, Mark Carney's been mentioned several times today. He was quoted in The Guardian last month in the UK that organizations that do not take into account ESG and climate issues, he was very blunt, he said those organizations will go bankrupt. And I think that it sounds alarmist, but I think that's the sort of language that we're hearing more and more. And the other point I would make is that I spent most of the last 20 years living in the UK, and I come home to Canada this year to join FTSE Russell. And I spent the last election cycle in 2017 in the UK, and I was back this year for the Canadian election. And the comparison is very striking to me. Again, what's going on here in Canada, more so than I think in the UK. Green issues, climate change is a topic that I was very struck by how it was central. It was a topic part of the election cycle. That is not the case in the UK. Of course, the UK is having a nervous breakdown with Brexit, but it's a topic that I think it just resonates here more so than the United Kingdom and possibly the United States. Those are my thoughts.
So I would think that there is a confluence of various factors that explain the current momentum, as I see it, when it comes to the ESG focus. I think there is a generational agenda here with the millennia becoming much more active, including seeking a political voice on matters that are important to them, and the environment specifically, but also more broadly, ESG items are very important to them. So there is a populist social movement, if you wish, that escalated those items into the radar of a broader public. This is very much supported by the political agenda at the global level, but also specific in a number of jurisdictions, an increasing number of jurisdictions and across the world where there is a recognition of environmental items and sustainability in general. And because of the confluence of those two things, I think the business is taking a note. So I think what you outlined, Paul, is the trend that is quite important already and is here to stay.
So just adding to Halina's comments, what I would say too is that the green bond market is it's now a mature market. It can play a real role here, which I think people are looking for those opportunities to get involved in some way. The green bond market's allowing investors to get involved with their money. Obviously, there's opportunities to get involved with your time, with your influence, with various other factors. But the overall comment being that there is a groundswell of interest in the environment, in climate change, in what we're going to do in order to affect climate outcomes, and green bonds are in the midst of that conversation at all levels. We have corporates, we have governments, we have individuals, and as long as you have that groundswell or that confluence of everyone kind of pulling in the same direction, I remain optimistic that we'll have a good outcome.
So in an earlier panel, Nalini had said, you don't need to sacrifice returns to invest in ESG. Can investors make solid returns by investing in green bonds? And are they willing to make a smaller return in order to make sure that they're investing ethically? Halina?
So maybe I will comment based on a specific Manulife experience, which leads to some more general universal conclusions. So we issued green bonds twice. We were the first life insurance company that to do so. First time in 2017 in Singapore, $500 million issue, and then in Canada in 2018, another issue. So what did we learn from this experience and going into the market, and why we did this? So from the issuer perspective, since we naturally invest in a green assets as a company. We are a long-term investor, and the well-being of the policyholders, society, environment is very much at the core of our commercial interests. So we thought this will allow us to draw attention to the fact that we invest $1 billion naturally over each year into renewable energy, solar, wind, in timberland, and at the same time draw attention or align it with the sustainability agenda of the company. So when we went into this, we did not expect, based on the investor feedback, that we will get a cheaper issuance cost. So what it means on the investor side is they were not willing to compromise the returns. Mm-hmm. Why? And it's a consistent feedback that we hear from fixed income investors. We do not have a mandate to compromise returns in order to invest in green assets. So we have a fiduciary responsibility to our retail investors to optimize returns as per the mandates of our various funds. So what I concluded based on this is that we will not necessarily have a homegrown outcome when it will be cheaper for issuers to issue green and investors willing to accept lower returns, unless retail investors specifically say, I want you to seek green type investments, bonds, etc., because otherwise the wholesale investors would say, well, I have my own fiduciary duty to meet. So I also have to say we did not have to pay anything for issuing the green bond. So there are some costs, incremental costs compared to the relative bond, namely we do have to ring fence funds that the bond is financing. We do have to have a process, governance process, to make sure that the funding we raised supports the assets we said it does. And hence there are reputational risks. There may be some legal and accounting risks. So there are risks that are incremental to the regular bond. By the same token, there are also what I call intangible benefits. And one of them is an amazing response from our employees, how proud they were that Manulife did this. And I hear the same from our investment colleagues, that whenever they do this renewable energy investment, the intangible goodwill that is generated across their teams is quite tangible in terms of the employee engagement. So I think given the state of the market, that the costs of issuing green are not prohibitively high, and still the nascent nature of the market, I do not think that in North America and Asia specifically, where there are not enough funds specifically dedicated to green, we are seeking cheaper issuance, or the investors are willing to compromise to have a lower returns. But solid returns, absolutely.
Okay. So narrowing this down a little bit into just looking at Canada, since we're here today, what does the growth of the Canadian green bond market look like? Specifically, the breadth of issuers, variety of maturities, And also, how does this relate to a country that's considered extremely rich in natural resources? Paul, Elizabeth?
Maybe I'll start
Go
this
ahead.
one. So at Ontario, we issued our first green bond in 2014. We've since issued 6 green bonds for a total of $4.75 billion. That makes us the most frequent and the largest issuer of green bonds in Canadian dollars. So we have a little bit of a track record we can draw on here. And just to comment, in terms of what investors are willing to accept in terms of return, what we found with our green bonds is that in the secondary market, they tend to trade through the Ontario curve. And so investors see performance, which I think is a good thing for them. It's a good thing for us. Because we do come back to the market with some regularity, we've been able to reopen some of our bonds. And so when we're reopening them at market where they're trading in the market. So if they're trading below the Ontario curve at that point, that would be where we would be pricing them when we reopen them. So investors to some extent are willing to meet us there. But what I would say is there at this time seem to be, and Halina referenced this as well, investors that are seriously in the space will sometimes accept a slightly lower return because I believe they see their fiduciary duty as being in 2 parts, one being the financial return and the other being the ESG return. And so when they're looking at both those pieces, they're doing their analysis and adding it up using their own methodologies and figuring out whether they consider it value to purchase the bond. And then there are other investors that find it very hard when something is below the curve to invest in it. And so they will make their own investment decision based on purely financial metrics. And so we have both of those players in the market. And as issuers, that is sort of the point of tension, I would say at this point, is that investors are asking for more and more from the issuer, and the issuers are kind of saying, well, and what will you pay for that? Because it is potentially more work, more risk, various other intangibles are added into the mix when you do a green bond issue. And so you want to talk about where the point of balance is between the investor and the issuer in that conversation. In terms of Canada as a natural resource, I think it's actually the reason why we should be most involved and why the market here is growing. We have a beautiful country. We have massive natural resources. This is really, I think, very much in line with that, what I consider the culture of Canada, and what it is to be Canadian is to protect what we have here.
You should run for politics, Elizabeth. That's very good. I completely agree. I think, again, making comparisons to other countries I've lived in, like including the United States. So first of all, this idea that Canada cannot be green is, I agree with Elizabeth. And look, green bonds is a certain type of financial instrument, but I think what might be more appropriate for Canada is transition bonds, which, as people may know, may or may not know, is going from brown to less brown. And so that's, to me, the financial instrument that might be more appropriate for Canada. Let me just say, however, like Chris, who I thought his presentation was fantastic this morning from Bloomberg, we at FTSE Russell and Bloomberg, we're the scorekeepers. You and my colleagues here on the panel are the financial participants. We do not give financial advice, and our job is to make sure we give the tools that you need, including our FTSE Russell Universe Bond Index. I think the other thing I would say about green bonds, particularly in Canada, the title of this panel I think is very interesting. It's called The Green Rush. And I think there is a slight sense of gold rush to this, but what I would suggest is that this is not a gold rush. Cannabis was. Apologies to those who've invested in cannabis, and certainly if my friend Richard Carlton's in the room, I no offense. Interesting market, but let's face it, we're at the tail end of that sector. This is not a gold rush. This is fundamental. And I can assure you, we launched a government bond index globally, and we're going to be doing one for Canada. It will become I'm an information guy. It'll become another column in the matrix fundamental to every investment that we make, fixed income, equity, multi-asset. So it's not a rush, in my view, but again, a good title for the event. And I'm with Elizabeth. I think that as a Canadian, I don't know where this us and them came from. I am as concerned about the growth of this country, which we rely on oil, and how, and again, thinking about indices, definitely oil extractors can be in ESG indices. And the reason they can is because we need to benefit those, give them better rating in our indices, those that are making progress. Those that are doing nothing and sitting on their hands, they get off the index. So I do think you can still be in an ESG index, even if you're in an industry, as long as you're going in the right direction.
So it's a change of mindset that's here to stay when it comes to investing.
I think so. And I think, as Halina says, it's a generational thing. I mean, our children, my God, thank God for them.
Yeah.
So,
I would like to add to this, because I find the transition aspects critical. And we cannot be too self-righteous, dogmatic, and alienating in our zeal to protect the climate and says, no, you are in energy, you are oil, you do this, and out, because we have to carry the middle, the majority, and anything that supports the climate is the right direction. And I feel quite passionate about it because when we issued our green bonds, we actually had enough deep green assets. So I am not speaking from any self-serving perspective. I am speaking also as the citizen of Canada, and very concerned with the fact that when I hear accusations of greenwashing, we have to check this and that it may actually be counterproductive to the very cause that we are trying to promote.
So where do we go from here? You know, is it more social bonds, sustainability bonds? And Paulette obviously mentioned transition bonds as well. You know, where do you see this going at this point?
Well, I already made my plug for transition bonds. So that's where I think it's going. Maybe I'll make one more plug. And again, I'm not trying to plug, and thank you again, Bloomberg, for having us. You know where I think also there's a change, and this is my parent company is the London Stock Exchange. And for those of you that may or may not know, we actually created a new market called a sustainable bond market. So now bonds can only get on that listed. It's a bond market, so you can only get listed on that market if you meet certain criteria. So I think that's an interesting development. Again, I guess I would say that I work there, but it's I think that's something that nobody would have predicted 5 or 6 years ago. A sustainable bond index. So that's my thoughts.
So my thought would be, I am not sure whether we will see more green only or more broadly sustainable, because speaking to investors, there is a bit of a natural tension and issuers between the two. Because what's the key risk issuing sustainable or green? It's those reputational risks I mentioned. So the market needs more definition, more rules, more standardization, which is more difficult to achieve the broader the scope of issues that those bonds are trying to address. So I actually was surprised speaking to investors like sustainable versus green, that many of them, I would say majority, would go for green because it's easier to grasp. So while the agenda is important in terms of the practicalities of the market, I think we may have a growth in a narrower range of asset class. Elizabeth?
I would agree with Halina. It's just a lot of what we've funded with our green bonds have actually been hospitals through our energy efficiency and conservation framework category. And hospitals, arguably, because they're building with LEED green standards and that in place, we put them in the green bucket, but they obviously have a social context as well, where they're bringing healthcare of a certain level to communities, and there's a big social gain there that we could do a sustainability bond and tap into both of those. That being said, the social side, ICMA does have some guidelines for social bonds. It has guidelines for sustainability bonds. But the difficulty, again, is investors are asking for metrics. Please measure and report. And that part of the equation is not as fully developed as it is in the environmental world in terms of what measures investors are looking for, what they'll accept, whether it's actually possible to gather that information and report it in what would be received as a tangible way. Meaning, how do you measure that your healthcare has improved? Is it number of patients seen? Is it positive surgery outcomes? Is it like there's so many things that could play into that factor and factor into the reporting you're doing. And so it's quite a gray area. And until it gets a little bit more resolved, I think we're quite happy to stay in the green lane because it does have metrics we understand and can report and can gather. And the social and therefore the sustainability side of it are a little more awkward for us. And there's already quite a bit of work involved in getting the reporting done. So it's hard to sell that internally to do even more work on reporting than we already do, because it's a 60, it's sort of a, probably actually more like an 80-20 rule. We do 1 to 2 green bonds a year and we spend an inordinate amount of time creating the reporting that's required for those.
And if I could just interject one more time on this point, because I think it's an excellent point. And I guess I just want to make sure, because like this is exactly the challenge that we as index providers face. And it was interesting what Chris said about their indices, same with us. Because we're struggling, now granted there are committees, global as well as Canadian ESG data councils that are trying desperately to help companies like yourselves. But what's actually happening right now in the industry is as similar to Bloomberg. Most of our indices in ESG are custom. We have some basics. We have our fixed income indices, for example, but almost everybody wants to do a custom because they have a slightly different perspective. And that's, I think, how the industry is going to evolve, because we're now learning. We have the benefit of dealing with basically every pension fund in the country, and every single one is talking to us about an ESG index, but they're all slightly different. And so collectively, I think the industry, and I think this is an industry responsibility, this isn't just a commercial individual organization, collectively as an industry, I think we'll get there. But we're not there yet. I think that's a fair point. And that's interesting. I never thought of that people pick green because it's easier to understand. Yeah. The governance one in particular is tricky. So that's very interesting.
What can regulators do to incentivize ESG debt issuances?
So maybe I
touching
start.
that one.
Maybe I start on the thought that I mentioned earlier, namely that there are extra risks and costs associated with green financing. So, but also there is a market need for more standardization that will also mitigate some of those risks when the rules are more clear. So that's one side. By the same token, there's always but. The more standardization, rules, frameworks we have, it also enhances the need for more governance, more monitoring, more disclosures, which raises the costs of issuing green. So the more the market develops and there is like more framework around it, actually the cost of issuance may rise for these very reasons. And the question will arise, who is to bear those costs? Because at some point, if we go to our companies and we embark and we want to issue green, we also need to justify, like with all the risks that we may be creating as a result. So what's the benefit, how we measure this and how we mitigate? So this is where I see the role of governments or regulators, because it's an externality on which we as a society agree, and the commercial arrangements may not necessarily be pricing costs returns appropriately. So even simple things as some incentives or bearing of those costs associated with green issuance, or looking in more carefully on the regulatory side into the stability of cash flows that are typical of green assets, and recognizing them through appropriate regulations. So I believe that there is a room for the government, given that at stake here is much broader issue than commercial interests.
Yeah, I would, to add slightly to that, Regulators, if they come into this market and they help, I guess, advance the idea that ESG needs to be part of the risk analysis done for any investment, and they ask portfolio managers, institutions to report up how are your policies being integrating these factors? How are your investments being analyzed using these risk factors? Because at the end of the day, these are risks. So there's financial risk, which I think everyone is incredibly comfortable with and has been well versed and well taught. The ESG risks, I think, are a little harder to grab hold of, and in a world of numbers and black and white, it becomes a little gray and it makes people uncomfortable. And I think regulators can help in terms of putting a little bit of a framework, I think was the word you used, in order to get people to think, well, if I'm investing in this company, it has a great return. And what are the risks to that return? Because it's not always just a financial question. And so to bring that into more of the general conversation that is being had around the table about how money is being deployed, I think would be very effective. But I'm also very nervous about putting too much regulation in place, because I think it can shut down the market pretty quickly and make people move away from it rather than into it. So again, it's that fine balancing act between how much regulation is helpful and when does it tip into the harmful category. So,
Look, I got to ask about Greta Thunberg. You know, she's been in the news quite a bit of late. If you have Greta in front of you instead of an audience of market participants, what would be your explanation of what realities are being changed with green bonds, or how green bonds will help her generation?
So first of all, I would say what a gutsy young lady who I think is she autistic? Is that there's
or Asperger's? I think she has something on this scale.
First of all, incredible. And the other thing I guess I would say, and this is not what you want to hear when you're young. I mean, we were all young once. I remember when we were so impatient. And I guess, like, you know, I was born in the 60s, and, you know, it's we have made progress. So I guess I would say to her that when you're that age, you don't realize that the financial markets follow the money. But I actually truly believe that she's on the right side of history. Donald Trump said he would save the coal industry. Nobody's going to change the fundamentals of the coal industry in the United States. I'm not sure what he's going to say when he's trying to get reelected, but the use of coal has plummeted regardless. And that is a financial decision. That wasn't a regulation. I mean, there was part of it, but it was a financial decision. Now, it's because of fracking, but anyway, that's a different issue. So that's what I would say to her. I guess patience, which I sound like my dad, which no one, like when you're young, you don't have patience, but trust me, we are heading in the right direction, is what I would say.
And I would say that in order to have progress on any issue, the first thing is to raise awareness that there is an issue. And one sometimes may get cynical listening even like to us in this case, in the sense that I am saying Manulife naturally invests in green assets. So what difference does the green bond makes if we already have 13 billion of those assets on our balance sheet, et cetera, et cetera. And yet, the very fact that a company after company and governments stand up and say, we are doing this, this is important, we care about it, like the profile, the public profile of ESG agenda of green, even though it may not, behind it may be what companies would do anyway, is still very important to create a social and public commercial ecosystem that there is an issue and we care. So this is how I would justify why this issuance, the green bond market taking a stand matters. The second thing that I would tell her is, you are the change. in the sense that we talked about the need for also retail investors to increasingly insist. So maybe she should turn to you, Paul, and said, instead of, Christmas gift of this, I want you to invest your savings into certain assets, and then we will be looking for those assets, and the wholesale investors will have more niche funds to offer, and we will respond to those needs accordingly. But she is the change.
I would suggest to her that she is the change and to keep the faith. The experience of issuing green bonds for the province of Ontario has been a very interesting one in terms of, we've raised money that we've used to fund environmentally beneficial projects around the province, but it started a dialogue, and it's not just a dialogue within the Ministry of Finance or within the Ontario Financing Authority. It's a dialogue with the Ministry of Health, with the Ministry of Environment, Conservation and Parks, the Ministry of Natural Resource and Forests. Like, we now have conversations ministry to ministry about where this fits, what this fits with, what this drives. And that conversation is probably the most important part of the whole process. And that interconnectivity and everyone getting into the swing of it, into the same lane, going down the same road, trying to make the same change is really, I think, what is going to make a difference going forward. It's not issuing a green bond from the OFA's office. It's having that conversation be much more broadly had within the government itself.
Looks like we've run out of time. Just quick fireside questions to end this on a bit more of a lighter note. Yes or no? Is ESG investing a fad? Yes or no?
No.
No.
Nope.
And will the popularity of green bonds continue to gain traction? Yes or no? Yes.
Yes, but others will replace it. Transition bonds. I think social bonds. Like that's not the only thing in town.
Well, thank you
Sorry.
all so much.
Thank you.
Thank
It was
you.
a great conversation.
Thank you.
Thank you.